Hey traders, welcome to the final lesson. So we're going to put everything together, everything that we've learned so far. I'm going to show you how I go step by step from my top-down analysis all the way to my entries. And I'm going to use this example that I showed you in the previous video. And actually in the server, I had shared this exact analysis that I'm going to show you today. And then if I scroll down, you'll see that I was able to actually take the trade as well based on that analysis. So feel free to join the server. I'm literally sharing all this analysis for free as well. But in this video, I'll show you how I actually did that. So starting off, I always start off with the daily time frame just to get my overall bias for the market. So if you remember in the first video, we talked about how we have the trending phases in the market and then we have retracement phases. So we are bullish in the market currently, and I see that we are currently in the retracement phase before we continue with the overall bullish trend. That's why it's important to understand how we use the phases of the market and not just the overall market trend. So I see that we are bullish in the market, and just to break it down, we know that we are in the retracement phase because we had the break of that minor low. So we know that this is the swing high and this is the swing low. And anything that is happening in here in between is just our minor structure. So we know that after retracement, we are waiting to get in on that continuation of the overall bullish trend. A good place for this to happen from would be from a demand zone, right? So we have that impulsive buying move. That means that last selling move before the impulsive move was this demand, right? So at the time of that trade, we hadn't reached that daily demand zone yet. So I know for right now, my bias is actually to sell until we reach that demand, even though the overall market structure is bullish. So this is the way I form my trading bias. So going down to the 4 hour now, and actually I'll go back and I want to make this demand zone visible on the lower time frame. So I'm going to go back to the 4 hour and we can see that daily demand. The reason this is interesting to me is because I think 15-minute structure is being drawn here by accident. So the overall 4 hour structure is currently bearish. It's bearish until we go into that daily demand zone. After we reach this daily demand, I expect price to start reversing and for us to take out these highs. But for now, I want to continue. We take out that minor low, so this is our swing low, and I'm expecting price to come and take out this low. Once we take out this low, it's pretty likely that we'll go towards that daily demand as well. So that's what I was looking for on the 4 hour. However, on the 4 hour, you can see that there wasn't really any clean supply. Everything was touched already, so there wasn't anything to sell from. So I wasn't really interested in the 4 hour. But on the 15-minute here, which is my entry time frame, we can see that price was currently bullish. We just had the break of structure to the upside. However, even though the 15-minute is bullish, again, like I said, the 4 hour, I was expecting it to go lower into the daily demand. The daily demand is currently in the retracement phase, so I'm still expecting that to go lower. So on the 15-minute, I don't really care as much that it's bullish right now. I'm expecting it to come break down this low. You know, that is the low in the market because that was the minor structure that got taken out, and then from this high and this high, this was the lowest point. In the last video, I already explained why this was our valid supply zone. We can just look at the footprint again. We had that delta with the buying level before the supply. Price retested that level and gave the delta shift. So we waited for price to reach, and then once we got the close on the 415 candle over here, stop loss at the high there. I mean, of course you could have traded straight down into that daily demand, but I always take a 1 to 3 only, and you can see again, we just play it out, reacted to the demand, went back up, and then we eventually got that 15-minute break. An SMC trader would have waited for the break to have confirmation that we are starting a bearish reversal, but by using the delta, we can get in on those reversals early, and then you can see that we reached that daily demand perfectly. On the 4 hours also impulsive, and we break that low that I was talking about. And on the daily again, you can see that we reached that demand perfectly, and then you'll see later on, we start pushing up, had the break of the internal structure. These are all good signs that we are going to start going up again, in line with the overall trend. So in the same week, and I showed this all in the server as well, I took a trade on EU as well the exact same way. So I want to share that example with you also, and I'll just show you quickly here that I did call this out in advance on the 24th of October, just so you know that I'm not cherry picking these trades to show you how good the strategy is. I actually anticipated these moves, and of course you will be able to as well. So let me just roll this back to our entry. So it's over here. I will start from when we were looking at the analysis over here. So we begin again on the daily time frame. So it's quite similar to the GU trade. What I saw was that price was overall bullish, and of course we are in the retracement. So you are usually in the retracement. You got the breaker structure. You can see the internal structure was never taken out until over here. So that was our high. It only got swept over here. That's why I've drawn it like this, because we didn't break above it. So even though we did have that retracement here, we should have broken above it. And for me, that is a sign of weakness, and that is why price continued to sell so strongly afterwards. But yeah, since we didn't break, this is still a retracement move for me. And if we want to continue with the bullish trend, then for me, I start looking for demand zones once again. So we have that impulsive buying. The sell before the impulsive buying is in this candle. And I know it's quite messy, and you gotta remember these were pre-election market, but I think they're still good examples, so I want to share them. So what we see is that this was the low, because that was the previous minor high. This was the swing high. This is the swing high, and then this is the lowest point. This is the demand, and once again, we only sweeped this. We didn't break below it. So for me, the bullish structure is still intact, and I'm still expecting the upside now from this demand. Until we close above this, I'm still happy to look for buys. So this is why you have to be mechanical and not be scared, because you're like, oh, we're really getting close to the bottom of this demand. It doesn't matter. You are in demand, you're in a bullish trend, so you want to be buying. So with that in mind, we go to the 4 hour. Yes, it's currently bearish, but we are expecting that reversal from the daily demand. So first sign here is that we are taking out a minor structure, which means we're confirming the lows and the highs, and it'll probably come into a demand and push up. However, you'll see that there was no clean demand here again. So for me, 4 hours, not currently interesting to me at this time. But I was still focused on the 15-minute, which is my main entry time frame. So it's always good when the 15 lines up with the 4 hour. In just these two trade examples, the 4 hour didn't really provide anything interesting, but it's fine as long as you still have your main bias, and you can refine on the 15-minute. It's all okay, but of course, those things are just additional confluences. So it's good when you do have those, but it doesn't mean that there is no trade if you don't have it. So once again, you have a pretty small gap here, but again, you just want to be mechanical. So a gap is there, and this is the sell before the impulsive buying. So I marked the zone, and yeah, it is quite a big zone. And you'll see in a moment that it does actually get touched. However, all I'm interested in is following our trade plan. So 15 minutes bullish, we have the demand, and this is on the 24th of October, 8:15. So I'm going to go over to Euro USD, go to the calendar, and yeah, it's not the most user-friendly software, but it gets the job done. So we go to October the 24th, and for some reason it never actually goes to that date. So we're on the 25th, let's go to the 24th. And yeah, well, you can see it so clear here anyways. This is that 8:15 candle, and you can see that it's actually flashing really red here, so this is very good and interesting to us. However, you always want to take just the biggest number, you know, and this is the biggest negative delta value, so 156. So that is all I am interested in, and I'll mark that as the red delta, and I will just play price over here so you can see that we did touch it. And for SMC traders, this would be, you know, mitigated and they wouldn't care. And yeah, you probably could have traded that also. I mean, if your broker actually tagged you in, but either way, I still am interested in this demand zone, even though it's being touched quite a few times here. You'll see that eventually, and this does happen with this strategy, you'll see that we're going too far, but you'll see that sometimes it does take quite some time to actually reach your specific levels. I mean, of course, because you're refining, this took 5 days, right? You're really refining down a supply and demand zone into a specific level. But you can see the retest on the 29th of October, so I will go to that time. So we have that right here. Once again, you can see that we are having the rejection and reaction on that level. In this case, you want to see the delta shift again, so from selling to buying, since we want to buy, and you have that positive delta close on this candle right here. So this is 12:45, and at the close of this candle, I took my entry. So I have that marked here, also 12:45. I mean, obviously after candle close, then it's the next candle that you're entering on. Now, stop loss is also important because you don't want to go right below the demand zone. I look at the structure as well. So where was the last low before this one? It was over here. So that's where I would put my stop loss, over here. And then I target again, 1 to 3, like that. And in this case, you can see it lines up perfectly with the 15-minute swing high, so it's not actually marked here, but price was bearish here again, and that's why I say this entry model is good, because even if the structure hasn't aligned yet, you can still get those early reversal entries. And I'll just play that, and you can see that eventually we tap that TP. Now, what I want you to also see is that even though we had these reactions from this demand previously, you can see how significantly clean and strong this one is. And just for trade management, this was the last internal structure, so I always look on the left after take my entry. Once we break that high, I am break even on this trade as well, just so you know how I manage my trades, but yeah, price never came back here. And yeah, it was a very nice TP. I TP'd right here. And I just want to show you again on the 4 hour what happened. So on the 4 hour, you can see that we start heading up and breaking that high. So we get that 4 hour trend shift. So we were able to anticipate and already get in on that 4 hour trend shift early. And if I go on the daily, you can see, well, it lines up with that 4 hour. The internal high on the daily is broken, where you had the first one here and then a second one here. And like I said, so using this strategy, you're really able to anticipate these early reversal moves. So those are 2 trade examples using the strategy, and you can check out the server and future videos on this channel, and I will just keep sharing more trade examples that I'm taking and my top-down analysis process. But yeah, I hope this course was easy to understand and that you understand the strategy. Feel free to ask me loads of questions and send me loads of examples of things that you're testing. I mainly trade on EU and GU only, so feel free to explore the strategy on other pairs. I only take my entries on 15-minute candle closes, so you can also have a look at other time frames. But yeah, this was the entire strategy, so thank you for learning it with me, and I look forward to trading it alongside you guys.